If you run a home care agency and you pay caregivers, office staff, virtual assistants, bookkeepers, marketers, or other workers, there's one question you need to answer before the first payment is ever made. Is this person an employee or an independent contractor? Because getting that question wrong can create tax, payroll, and compliance problems. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And today, we're beginning a brand new series called How to Pay Yourself and Your Team the Right Way. And the very first step is worker classification, because before you decide how to pay someone, you first need to determine how that worker should be classified. Now, let's start with the basic idea. Generally speaking, there are two ways someone can work for your business. They can be an employee or they can be an independent contractor. And I know many business owners prefer contractors. It feels easier, there's usually less payroll administration, and it may seem less expensive. But here's something important to remember. You don't get to decide worker classification based only on convenience. The working relationship determines the classification, not the other way around. Now, for home care agency owners, this is where things can become confusing. Today, there are healthcare technology marketplaces where licensed healthcare professionals choose PRN shifts, accept assignments through an app, work for multiple facilities, and receive Forms 1099. Those arrangements may be legitimate, but here's the important point. Receiving a Form 1099 doesn't determine worker classification. The Form 1099 is simply how someone is reported for tax purposes. The real question comes first. Was that worker properly classified under the law? That's why the IRS looks at the entire working relationship, not just the tax form that was issued. So, how does the IRS make that decision? Let's simplify the three main areas. First, behavioral control. This asks who controls how the work is performed. For example, who sets the schedule? Who determines how care should be provided? Who trains the caregiver on agency procedures? Who supervises the work? Who requires certain documentation? The more control your agency has over the work that is performed, the more the relationship begins to look like employment. Second, financial control. This asks, is the worker really operating their own business? Do they invest in their own business? Can they make a profit or suffer a loss? Do they advertise their services? Can they work for multiple clients? Do they decide how their business operates, or are they primarily dependent on your agency for ongoing work? The more financial independence the worker has, the more likely they may be operating as an independent business. Third, the relationship of the parties. Here, the IRS looks at the overall relationship. Is the work ongoing? Is the worker performing services that are central to your agency? Do you provide employee benefits? Do you have a written agreement? And most importantly, does that agreement match what actually happens? Because a contract by itself doesn't decide worker classification. The facts always matter more. Now, let's make this practical. Imagine you hire a caregiver. You assign their clients. You determine their schedule. You train them using your procedures. You supervise their work. You require them to follow your care standards. You monitor their documentation. That relationship may look much more like an employee than an independent contractor. Now imagine a different situation. You hire a marketing consultant, a website designer, an accountant, or a business coach. They use their own methods. They decide how the work gets done. They work for other businesses. They use their own tools, and they're hired to deliver a finished result, not to follow your daily direction. That relationship may look much more like an independent contract. Notice the difference. It's not the job title that determines worker classification. It's the relationships. And here's another important point that's often misunderstood. A person can work for multiple businesses, choose their own schedule, and still not automatically be an independent contractor. Likewise, someone could work primarily for one business and still not automatically be an employee. That's why there is no single test. The IRS looks at all of the facts together. One tax form doesn't determine worker classification. The working relationship does. Now, let's talk about documentation. If you classify someone as an employee, keep employee records. That includes documents such as Form W-4, Form I-9, job descriptions, time records, payroll records, and any required state employment documents. If you classify someone as an independent contractor, keep contractor records. That may include Form W-9, a written contractor agreement, invoices, proof of payment, and documentation supporting why that worker operates as an independent business. And if you're ever unsure how a worker should be classified, don't wait until tax season. Ask the question before the first payment is made, because that's when the decision should happen. Remember, every payment you make tells a story. Your accounting records should be able to tell that story clearly. So here's the big takeaway. Worker classification is one of the first business decisions you make when someone joins your team. Get it right, and everything that follows: payroll, tax reporting, record keeping, and compliance becomes much easier. Get it wrong, and every payment after that becomes much harder to fix. Because paying people the right way starts with classifying them the right way. In the next video, we'll build on this foundation by talking about how to hire your first employee. We'll cover the paperwork, the payroll setup, the records you should keep, and the systems every home care agency owner should understand before bringing employees onto the team. I'll see you in the next video.